Hello and welcome to another My Solo 401k Financial and LinkedIn YouTube webinar. We're just waiting for the viewers to join and testing the audio, and then we'll be getting started here momentarily. Thank you so much. All right, so we're going to get started with some housekeeping type items and then go through the content that we wanted to share. If you are on YouTube, if you could please like this video and subscribe, we'd really appreciate that for that to help give you reminders for more videos like this. Another great venue is going to be our community. So we're going to first go through some disclosure language and then talk about some of the resources that we have to offer. So the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So today's topic, we're going to talk about ROBS, 401k business financing. We're going to specifically, with a focus on using the funds to start or buy a franchise. We want to go through some of the basic concepts and then talk about some important compliance rules and considerations, and then take a look at some of the top frequently asked questions that do come up. As I mentioned, we do have other resources we want to highlight. For example, on our community, we host webinars every day of the week. All are welcome. It's free to join. So let me show you that here. It's mysolo401k.net/mycommunity. So as you can see, for example, tomorrow and Friday, we will be talking about crypto IRA versus crypto solo 401k. Another great venue is our forums, where folks ask questions 24/7. You can see what other people are asking about. You could post your own question by clicking create post. So that's another great place to share the knowledge and learn from others. So first off, let's talk about some of the basics. So what is a ROBS, or a rollover as business startup? Well, it's a type of transaction that will allow you to use your retirement money to start or buy a business without having to pay taxes or penalties. Some of the key ROBS requirements are that you would use retirement money that's in a former employer plan or a non-Roth IRA. So it has to be money that you're eligible to roll over to a new 401k. So in simple terms, that means money that's in a former employer plan or a non-Roth IRA. The funds would be used to start or buy an active business. So it needs to be essentially what they call an operating company. So that typically means providing goods or services. You have to operate the business via a C corporation. So that's one of the fundamental requirements. You need to work in the business as a bona fide employee. So a good rule of thumb is working at least 1,000 hours a year. The high-level ROBS 401k process is going to include a number of steps. So number one, and we of course handle these steps and guide our clients through the process, right? But step one is setting up a corporation, so incorporating a C corporation. The C corporation will then sponsor a 401k plan. You will roll your money over to that new 401k plan from your existing accounts, right? Those former employer plan accounts or non-Roth IRAs. So the transfer from the existing account to the new 401k account, that's not going to be a taxable event. The money's just going from one retirement account to another. Once the money is in that new 401k plan, the plan that you would set up with us is going to allow you to invest in the stock of your new employer, i.e. that new C corporation. So now the money goes from the 401k account to the business account. So that is not a taxable distribution. It's an investment inside the 401k. So therefore, ultimately, the funds are able to be invested into the business without having to pay taxes or penalties. Once the money hits that corporation account, step 5, the C corporation can use the funds for any type of legitimate business purpose, including buying or starting a franchise. So now we're going to go through the next part of the presentation, which is to talk about some of the top compliance rules and considerations for using retirement money to fund a franchise via a ROBS, rollover as business startup. So number 1, the ROBS 401k funded business must be operated as a C corporation. There's no exceptions. So you cannot operate, for example, as an S corporation or a partnership. The C corporation must be an active operating company. So it's not just an investment vehicle. The C corporation really needs to be the business, right? You're going to own and operate the business through that C corporation. Now, the C corporation can have subsidiaries. So, for example, let's say you want to hold the real estate in one subsidiary that's owned by the C corporation, but then operate the business via another subsidiary, right? That's an acceptable structure from a 401k perspective. Next consideration is that Roth IRA funds are not eligible, right? So that's one of the first key requirements is you got to have money that you're eligible to roll over to this new 401k plan. So money that's in a Roth IRA could not be transferred to any type of 401k, including a ROBS 401k, because of those Roth IRA rules. So it can't be Roth IRA, it can't be non-deductible like after-tax money in an IRA. It has to be really pre-tax money in an IRA, a traditional IRA. If you're going to use Roth money, we know it can't come from an IRA, but it could come from a former employer 401k. There are more and more people that do have Roth money in their 401k plans that they have at their job. So if you have Roth money in an employer plan, you can transfer it over to the ROBS 401k. In that case, the money would have to be held in a separate sub-account for the 401k. So you'd have 2 accounts for the 401k, one for your pre-tax money that you roll over, a second for the Roth money. Generally, you can only use funds in a former employer plan. Again, so one of the threshold considerations is, do you have money that you're eligible to roll over? So if the money is in your current employer plan, you're probably not going to be able to roll it over until you quit your job. I mean, while there are some exceptions that apply, typically you can only roll over funds from a current employer plan once you are either 59 and a half years of age or older, or you actually separate from service and you quit. So if it is in your current employer plan and you're not planning on quitting, it doesn't hurt to ask by calling up the administrator of that plan, call the number that's on a recent account statement, and you can simply ask if you can transfer the money to an IRA. If they say yes, then that means you could transfer the money to this ROBS 401k plan, but they're going to say, well, you're not going to be able to transfer the money out until you actually separate from service. Next consideration is that the ROBS 401k fee cannot be paid with retirement monies, with retirement funds. So you have to pay that ROBS 401k fee, for example, our fee, with your non-retirement money. And the C corporation can't later reimburse you, right? Once the C corporation's been funded with your retirement money because you've gone through that ROBS 401k business financing process, the C corporation can't turn around and reimburse you, nor can the C corporation pay off maybe a credit card that you use to pay the ROBS 401k fee. Instead, you would receive stock personally in exchange for paying this fee. Now, so from your perspective, that's part of your investment in the company for which you may receive stock personally in proportion to the amount that was invested, right? So if you paid our $3,000 fee out of pocket, now you get 3,000 shares in the C corporation. from the C corporation perspective, it would be acceptable for the C corporation to report that as part of the startup expense, because this was an expense of setting up a 401k plan for the business. In that case, you would coordinate with your tax advisor to report it as a business expense. Now, one of the fundamental requirements here is that you roll over the money to your new employer plan. So in order for you to be able to participate in that new 401k plan and therefore be able to roll your funds into the plan, like we talked about at the outset, you need to be a bona fide employee. So that means that you're a W-2 employee, right? 401k plans are for W-2 employees. So you cannot be a 1099 independent contractor with respect to this C corporation. Once you receive compensation for work that you perform in the business, that compensation has to be reported as W-2 wages. So again, not as a contractor. Income and expenses must flow through the C corporation account. Once the company is set up and funded, like all good, any good business practice, if you have an entity for your business, generally speaking, you pay for the expenses and the income flows through that entity account. It's no different here, right? Income and expenses flows through that ROBS C corporation bank account. The C corporation has to file a tax return, in this case, a C corporation tax return. So at 1120 at the federal level. If you're going to receive compensation, it's paid to you as W-2 wages. If profits are distributed, right, after the corporation has paid expenses, including your W-2 wages, paid taxes, because it's a C corporation, the C corporation could distribute profits to the owners. In that case, those profits would have to be distributed in accordance with the ownership percentages. And the ownership percentages, or the ownership, if it's just you investing, right, is going to be held in the 401k for your benefit and by you personally. And the ownership is going to be held in proportion to the amount of retirement and non-retirement money invested. So if 90% of the stock is held in the 401k for your benefit and 10% is held by you personally, because 90% of the money invested came from the 401k rollover, then to the extent that the C corporation is distributing profits out, 90% of those profits would flow back to your 401k account. It would flow back on a tax-deferred basis. Your compensation must be reasonable. So first off, you need to wait to receive compensation until the corporation is generating income to justify your salary. Your compensation, like we talked about before, must be reported as W-2 wages. Again, coordinate with your business tax advisor. And ultimately, it must be reasonable. So what does that mean? So fortunately, the IRS does not specify, right, what's a reasonable salary down to the dollar amount. Instead, it's a standard. So the standard would be, in short or in simple terms, no more than what the company would have to pay someone else to do all the things that you do. So based on the industry that you're in, the geographic area, your responsibilities, if the C corporation went out there and hired someone else to do all these different things, how much would the company have to pay someone else to do those different things, to perform the work that you're performing? So the ROBS 401k cannot guarantee a loan to the ROBS C corporation. So the C corporation could certainly go out there and obtain a loan. For example, it's very common where our clients are obtaining SBA loans. So the SBA loan would have to be made in the name of the corporation, whether it's an SBA loan or a non-SBA loan. It has to be made in the name of the corporation. So it's a commercial loan. You may personally guarantee it. As a matter of fact, the SBA guidelines are going to require that you personally guarantee it. But you can't sign anything indicating that the 401k, remember the 401k is technically a stockholder of the C corporation. It's a stockholder of the borrower. You can't sign anything that indicates that the 401k would guarantee a loan to the C corporation, whether that specifically calls out the 401k or indirectly does by saying that all the stockholders of the borrower, the C corporation, guarantee the loan. The ROBS 401k funded business cannot do business with any other businesses that are owned by you or a disqualified person. So the ROBS C corporation can't interact either directly or indirectly with another business that you own. So for example, let's say that you have a dairy farmer who wants to use the ROBS 401k business financing plan to fund a ice cream shop. This individual is not going to be able to set up the C corporation, fund it with his ROBS 401k plan, and then have that C corporation buy all the milk that's needed for the ice cream from his dairy farm or her dairy farm business. That's a simple example at this point here. So we've got some more items to know, and then we'll shift and go through some frequently asked questions that come up in this context. So number one, in terms of the additional items to know, funds from inherited IRAs are not eligible to be rolled over to a ROBS 401k unless they were inherited from a spouse. You cannot personally make a loan to the C corporation. If you make an investment, it needs to be structured not as a loan, but as a stock purchase. The ROBS C corporation can't own an S corporation. So if you're buying a business and you're buying it as a stock purchase for whatever good business reason, the C corporation can't buy the stock of an S corporation because S corporations are not allowed to be owned by C corporations. In the franchise space, of course, part of the reason that you want to get into a franchise is because the name is recognizable. So, of course, as we know, if you're going to use the ROBS 401k plan to fund the business, the first step is setting up a corporation. And that's ultimately going to be the entity that's going to own and operate the business. When you set up a corporation, you have to list a name on the articles, right? You know, XYZ Services, Inc., right? So sometimes there's an inclination to list and use a name for the corporation that is similar or the same as the name as the franchise. So before you go down that path, it's going to be prudent to check with the franchisor in terms of their naming requirements. They may not allow you to register a name, even a name that's similar to their franchise name. Instead, they may require that you use a DBA, like an assumed name, a doing business as filing, or simply just license the use of the name from the franchisor. Okay, now let's go through some frequently asked questions in this space. So first question, I'm using ROBS 401k business financing in order to put $200,000 of my retirement funds as a down payment on a $400,000 SBA loan to start a franchise. I understand that stock will be issued to my ROBS 401k in exchange for the 401k funds invested in the business. Will I personally receive stock in exchange for personally guaranteeing the SBA loan? So the answer is no. Shares will not be issued to you on account of the SBA loan since the loan is debt, not equity. Next question is a home office question. I'm funding a new restaurant franchise via ROBS 401k business financing. The restaurant won't be constructed for 6 months, so I'll be working out of my home during that time. Can the C corporation pay me rent for using my home office? No. The C corporation that is funded with your retirement funds can't pay you rent to use part of your home as a home office. So that's similar to the point we made before about not having the C corporation interact with another business that you own. Next question is in regards to different lines of business. I'm using a ROBS 401k business financing plan to fund the purchase of multiple locations of a franchise. Can I operate each location via a separate LLC? Yes. In this case, each LLC would be 100% subsidiary of the ROBS C corporation. And that LLC cannot be taxed as an S corporation, since an S corporation can't be owned by a C corporation. I'm using a ROBS 401k plan in order to start a fitness franchise with funds in my rollover IRA. The business will obtain a mortgage to acquire real estate. I have already been approved by my bank. Will the loan be in my name or the name of the C corporation? So while you may personally guarantee the loan needs to be in the name of the C corporation. Next question is based on ownership. Is regards to the ownership based on funds invested. So here the question presented is I'm starting an eyelash extension franchise with my sister. We always discussed that we would own the business 50-50, but most of the funds invested will come from my retirement account. How will the ownership work? So the ownership of the company must be based on the funds invested. So an equal amount of funds would need to be invested by your sister in order for her to receive an equal amount of shares in the company. Next question is regarding a home equity line of credit. I will use a ROBS 401k to invest $250,000 from my former employer plan to start a medical spa franchise. I need another $100,000 and would like to use funds from a HELOC. Can I do that? Yes. You can certainly take a personal loan such as a HELOC and then invest the proceeds in the C corporation. In that case, the additional personal funds that you will invest will count as your personal investment, for which you will receive stock personally in the C corporation. So in that case, you would have to pay back that HELOC out of your own personal funds. The C corporation is not going to pay back the HELOC because that would be effectively the C corporation paying back a loan that you're personally obligated on. Next question. I've been researching starting a tree care lawn service franchise for over 1 year. And I just discovered that I can use a ROBS 401k to invest my retirement funds without paying taxes or penalties. I already set up an LLC with a name that is perfect for my business. Can I still use that LLC? The answer is yes. Keep in mind, though, that the LLC would either need to be converted to a C corporation or contributed to a new C corporation. And please note that if the LLC is elected to be taxed as an S corporation, the S corporation election would need to be revoked. Because remember, you have to operate the business via a C corporation. Now, it could be a subsidiary LLC, but a subsidiary LLC can't be an S corp because an S corp can't be owned by a C corp. Or again, you could convert it from an LLC to a corporation. So now in the records of the Secretary of State, that's not an LLC anymore. It's now a corporation that's taxed as a C corporation. Next question. I have an existing senior care consulting business. I'm looking to use funds in a rollover IRA at Vanguard to fund a new senior care franchise. Can the new ROBS funded C corporation hire my existing business to provide consulting services? The answer is no. The ROBS funded business is prohibited from hiring another business that you own personally to provide services to the C corporation that was funded with your retirement money. Next question. I will use a ROBS 401k to invest $150,000 from my former employer plan to buy a bread or cookie route franchise. I need another $100,000 and my father would like to invest these funds from his personal savings. Can my father also invest? Well, your father could certainly invest funds in the C corporation that's going to be funded with your retirement money. Please note that his investment must be structured as a stock purchase. So that means shares are issued to your father personally in proportion to the cash invested. So in this case, say 150,000 shares issued to the 401k for your benefit and 100,000 shares issued to your father personally. So that takes us to the end of the FAQs. If you do have comments or questions, please feel free to chat them over now. If you're watching as a recording, a great venue to continue the conversation is our forums. So if you go to mysolo401k.net/my community, it's free to join. All are welcome. You can create a post. You can see what other individuals are asking about. It's a great way to ask a question or learn from others. We have webinars every day of the week on our community, mysolo401k.net/my community. Again, it's free to join. All are welcome. Tomorrow and the next day, Friday, we will be discussing investing in cryptocurrency via a crypto IRA versus a crypto solo 401k, and go over the reasons why a crypto solo 401k is the best retirement account for investing in cryptocurrency. Well, it looks like that takes us to the end. So thank you so much for the participation. Again, please like and subscribe. We do appreciate you taking the chance to watch today's session, and we look forward to continuing the engagement on our YouTube channel, here on LinkedIn, as well as on our community. So thank you so much.